The Fed, that's what it's about today, and many investors perhaps sitting on the sidelines waiting to hear if we are going to be seeing any more stimulus coming through. What is your view in terms of how it's affecting trade in today's session, because the JSE is currently in positive territory?
Yes, certainly in positive territory. We see that Europe is also, and so is the FTSE. But I think there is a lot of cautious trading, just anticipation of what the Fed will say later on tonight, around about 8 o'clock our time. So yeah, we're seeing a lot of caution around in the market. But yesterday the US left us on a very positive foot. That's based really on some better than expected corporate results, and also some official data saying that the United States actually came out of their longest recession since World War II in June 2009. So that was very, very well received in the market. But however, Asia closed a little bit mixed this morning, where we saw Japan, due to profit taking. Yesterday was a public holiday for them, profit taking and a stronger yen affecting their markets. China slightly up, but kept by an expectation on a tax on the property sector there. But today we started off a little bit low and now trading above in positive territory, just in anticipation of some further good news out of the United States later on today.
Well, the fact that there was a lot of talk about the recession being officially over in the US, what kind of talk do you think we're going to be seeing from the Fed? Because a lot of people are concerned about growth downgrades coming through, and of course it's all about the verbiage of the Fed later on today. So if we do not see any quantitative easing, the second round of quantitative easing coming through in today's meeting, perhaps it's going to be mentioned in the next meeting. Again, it's all about unemployment and the growth scenario in the United States.
Absolutely. It's really about employment. It's about the consumer of the United States, who actually accounts for about 70% of the US GDP. So it's about what measures the Fed will bring in order to stimulate that side of the economy and to bring further creation of jobs in the United States economy. To stimulate the housing also, because we've also got housing data that's starting us off in this afternoon in the United States. So it's about what kind of measures they can bring in, and whether there'll be further quantitative easing, as you said earlier, and what changes and what stance they see in their monetary policy, and also whether is there any improvements. Do they expect any improvement? How long do they think it's going to take? And so it could sway either way tonight. But I think the anticipation is that there will be some kind of greener pastures, or some kind of expectations that there will be some improvements in that economy.
Just taking a look at some news that has just hit the market, that Irish bond auction was underway this morning, and we are starting to see quite a lot of demand coming through for the 4- and 8-year sovereign bonds coming through in Ireland, and of course this adding a lot of support for the euro.
Yes, absolutely. We saw that initially, that translated into the euro, but we also saw it translating into the rand, and as well as the US futures, which were trading down this morning. That's why our market was down also. But as soon as those auction numbers came out, there was lots of improvement there. And I think with the Ireland auction, because it was a bit longer dated, Dublin had to then ended up paying up a little bit. But we also saw the Greek Treasury bills auction that happened today. That was very well received, 6 times oversubscribed, whereas last time it was 4 times oversubscribed. And we also saw some Spain auction happening there, and that was also very well received. So lots of demand in the market as far as those sovereign paper is concerned. But so it is very well received, and I think that's why we see our market trading strongly up today.
Looking at the ANC NGC meeting, because towards the end of last week there were a few concerns about any changes in policy. Now we have, of course, President Jacob Zuma saying that there isn't going to be much movement on that front, and that the ANC NGC meeting should be focusing on other things other than policy changes. What is your view on the impact of this meeting on the local currency, given the fact that we have been strengthening today?
I think, local as well as foreign traders and investors just want no surprises, and they're so grateful that there have been no surprises. If anything, the president has come out saying that, they're happy with the way things are going, but they do recognize the need for employment growth, just like the rest of the world. South African employment numbers are not at good levels at the moment. I think the Treasury came out saying that, they need about 6.5% South African economy growth in order to sustain or to meet the requirements for employment that this country has. So that needs to be the policy going forward, and new measures in order to meet those requirements. And I think they take into light that the SARB needs to, as much as target inflation and manage inflation, they also need to look at other avenues of expanding and growing South African growth.
Looking at economic data set to be released in South Africa later this week, retail sales, of course, it's going to be for the month of August, so we could see a bit of a contraction. Many are talking about 7.1% from 7.4% in the previous month. Do you think we're going to be seeing a relatively depressed number in Ntombenhle, or do you think that it could surprise to the upside?
Yes, retail sales coming out tomorrow. Actually, I believe it is for July, not August. So we will have some World Cup numbers. I think the World Cup ended at about the 11th of July. So we will see some effects there. So from 7.4% in June to 7.1% expectation in July. So there will be some influence there. But I think generally the subdued number is because it is post World Cup and because also a high number because of the low base it comes from 2009, and also because we're having a low interest rate environment at the moment in South Africa.
Ntombenhle, thank you.